Hi everyone, Coulter Brown here from the Northern Ag Network. Thanks for joining us for this month's update on our livestock markets. Want to start out thanking our friends at Ag Risk Advisors for their continued support. If you have questions about livestock risk protection or pasture, rangeland, and forage insurance, be sure to reach out to them. Well, cattlemen are finding some reasons for optimism despite continued drought concerns and really high costs. This calf market is shaping up pretty strong here. Feed costs have come down this summer. Now, we are seeing a tough situation in the lamb market. That is difficult, and we're going to talk about that today because we haven't talked about the sheep in a little while here. And of course, we'll also talk about the mid-year cattle inventory update. Well, over 500,000 head of feeder cattle sold on the video in the month of July, and you can really start to see the impact that tighter supplies are having on the market. Compared to June, I'd say the video sales were $8 to $10 higher. And if you look back to last year, the calf market especially $25 to $35 higher, which producers are very glad to see given how sharply higher these production costs are compared to just a year ago. Looking at some of those calf prices, lighter 5-weight steers sold primarily from $220 to $235, heavier 5-weights $205 to $2.25, 6 to 6.5-weight steers $2 up to $220, 650 to 700 pounders $190 to $215, and the 7-weights $185 to $207. We are still seeing premiums for the value-added calves, but those premiums seem to have decreased from what we've seen in recent years, likely due to just the tighter supplies we're seeing, but generally you could say a $5 to $10 hundredweight premium for those NHTC, GAP, or verified natural programs. The yearling market has producers really excited. You can see just how tight we are on these yearling supplies, and feed yards are interested in animals that don't have to be on feed as long. Generally we saw 8 and 9 weight feeder steers selling in the high 170s to even up over the $2 mark. Given the premiums that we're seeing in the deferred futures, it's likely these cash markets will trend higher over the next several months. Feed costs will have a significant impact, but you can see how much that feeder market has rallied, and the futures at least tell us the market should move higher. Obviously, one of the main drivers in the cattle market is the continued contraction in the beef cow herd. USDA released their mid-year cattle inventory update in July, and they said total cattle numbers down 2% from last year. Getting into beef cows specifically, they said 2.4% lower than last summer. Really though, with cow slaughter running 14% ahead of last year, the reduction in cow numbers was expected to be larger, but it's still the smallest cow herd since 2014. Replacement heifer numbers are down even more, 3.5% lower, as more replacements have made their way into feeding channels. This is the 4th consecutive year of smaller calf crops, so supplies are definitely tightening, but it's not yet reflected in the on-feed numbers. In USDA's cattle on-feed report, they said that the total inventory was up 0.4% from last year, which, like almost every other month this year, is a record high, but the year-over-year gap is declining. Placements into feed yards were down 2%, but that was viewed as bearish by the market as expectations were for a 5% drop. Again, we are seeing more cattle placed under 700 pounds, which means fewer cattle available to be placed later in the year. Feed costs will have a lot to say about profitability this year and the appetite of feed yards to purchase cattle, but the corn price has gotten a bit more favorable for cattlemen. Over the last month here, we've seen the nearby corn contract drop 30 cents, seems to be wanting to settle around that $6 mark. From its May high though, corn is down $1.80. Now, volatility is very likely to continue, especially before harvest. Grain futures have been very vulnerable to outside markets this summer, whether it be crude oil, the stock market, interest rates, or that higher dollar. CattleFax isn't projecting as much downside price risk. They're saying that for the remainder of the year, corn likely to range from $5.50 to $6.50. Cost of gain is a major concern for feed yards, and we're seeing a wide range in it. Northern feed yards looking at a cost of gain in the $120 to $130 range, but in the south where that corn basis is extremely high, $2 in some cases, that cost of gain around $1.50. Hopefully that'll moderate with corn prices coming down some. And lastly, like I mentioned, I want to wrap up talking about the sheep market. It has gotten very tough here. We're looking at backlog feed yards and in some cases overfinished lambs and packing plants not running at capacity. Compared to the 5-year average, on-feed lamb inventories are up 35%. The last year numbers were 75% above those, although thankfully those numbers are coming down. It's a tough situation that we simply just have to work through. The sheep industry has seen some wide price swings if you look back over the last 2 years, so it's difficult, and we're certainly praying for our sheep producers that are fighting these challenges. And when we look at the cattle market though, the supply situation says that these are going to tighten. That should be supportive to the market and hopefully a couple years of higher prices. Now, one of the big concerns out there is demand. If recession can really pull that lower, we're concerned about it, but thus far, beef demand has performed well, and like we say, the supply indicates that we should be looking at years of higher prices, could put cattle producers in the driver's seat of this market. Next year's calf crop could be worth even more, and Katie barred the door on what these bred cattle and heifers could be worth a year from now. That's going to do it for this month's report. Thanks for joining us. Just a reminder, the pasture, rangeland, and forage insurance deadline has been moved out to December 1st, so now's the time to reach out to Ag Risk Advisors for questions on how PRF could protect your operation. Learn more at prfadvisors.com. Thanks for joining us today and have a good one.